Hello and welcome to today's lecture. I am Dr. Sheila Bijelwan, Assistant Professor at Swami Rama Himalayan University, and in this detailed session we are going to explore one of the most important institution in India's financial ecosystem, that is SEBI. SEBI stands for Securities and Exchange Board of India, with a comprehensive focus on its regulatory roles in the capital market. The role SEBI plays today is not only central to the functioning of our capital market but also integral to maintaining transparency, protecting investor and enhancing market credibility both in India and globally. India's capital market have undergone a remarkable transformation over the last few decades, from being shallow, opaque and largely unregulated in the early 1980s to becoming modern, technology-driven and increasingly transparent by the 2000s. This evaluation has been guided in large part by SEBI. The need for a strong regulatory body like SEBI became especially evident during the stock market scam of the early 1990s. This event exposed systematic weakness in India's financial system, including a lack of regulatory oversight, insider trading and manipulation in response to growing investor unrest and ending confidence. SEBI was formed in 1988 and later granted statutory power under the SEBI Act 1992. The SEBI Act of 1992 empowers SEBI to regulate the securities market in India, protect investor interest and promotes the development of the capital market over the years. SEBI has expanded the scope and depth of supervision to encompasses a wider range of financial instruments, intermediaries and practices. Today, it regulates stock exchange, disposition, mutual fund, merchant banker, portfolio manager, investment advisor, foreign investor, credit rating agencies, and many other participants in the financial market. In other words, SEBI roles extend across the entire capital market value chain, from issuer to investor, from primary to secondary market, and from public to private placement. To understand SEBI regulatory role, clearly let us first grasp the framework under which it operates. SEBI performs the functions through legislative, executive and quasi-judicial power. This means it can create regulatory implementation and monitor compliance and adjudicate disputes and violations. The fact that one body exercises these three roles allows SEBI to reply quickly and efficiently to emerging challenges and enforce its order with authority, responsibility, protecting the interest of investor, regulation, the security market and facilitating market development. Let us start by examining how SEBI protects investor. Investor protection is the foundational pillar of SEBI mandate. A capital market without investor confidence cannot sustain itself. In a market characterized by asymmetric inflation, where companies and market participation often possess more data than retail investor, the role of fair and vigilant regulator becomes indispensable. SEBI ensures that all market participants have access to adjudicate timely and accurate information. Companies are required to make period disclosure about the financial performance and other management events. These disclosures help level the playing field for all investors, particularly retail investors, who may not have the resource to perform deep financial analysis. SEBI has also implemented several regulations to prevent market manipulator and insider trading. Insider trading, which refers to the buying or selling of security by individuals who possess non-public price sensitivity information is one of the most serious threats to the market integrity. SEBI has defined what constitutes unpublished price sensitivity information, who are insider and what kind of trading prohibited. Violating face strict penalties including monetary fines, market loans and even implementation. By curbing insider trading, SEBI ensure that all investors create and the same level of information and that no one has an unfair advantage. In addition, SEBI regulate collective investment schemes such as mutual fund. It mandates the mutual fund disclose their investment objective, risk factor, past information and fee structure clearly to the investing public. Asset management companies are required act in fiduciary capacity, putting the interest of unit holders about their SEBI finish the can be charged impose norms for fund classification and restrict investment risky instrument beyond a certain threshold. These measures ensure the mutual fund investor receive fair treatment and are not exposed to hidden risk. SEBI has also built robust mechanisms for grievance redressal. It has launched the SCORE platform, which stands for SEBI Companies Redressal System, and centralized online portal through which investor can lodge complaint against any SEBI registered entity. Complaints are traced by a monitor and resolution. This transparency and responsibility. SEBI has also created an investor protection fund which provide companies in certain cases where investors suffer losses due to default or fraud. Beyond enforcement and grievance redressal, SEBI focuses on investor education through initiatives such as financial literacy program, education website, mobile app and mass communication media campaigns. SEBI seeks to make investors more informed and cautious. It conducts awareness programs in urban as well as rural area, targeting not only real investment but also student, teachers and professionals. By creating financial awareness about the capital market and its built. Now let us move to SEBI regulatory function. In the primary market is where a new securities are issued by companies to raise capital. SEBI role here is to ensure that the process of fundraising is transparent, fair and compiled with the legal framework. Where a company decides to go public through an initial public offering, issue new security via rights or draft the hiring prospect to SEBI. This prospect contains detailed information about the country, financial promotion, business risk, objective of the issue and proposed utilization of fund. SEBI securities thus document to ensure full and fair disclosure. Any misleading or incomplete information can lead to rejection or penalty. SEBI has also established regulation for various intermediaries involved in the primary market such as merchant banking, underwriting registers and share transfer agent. These intermediaries must register with SEBI and most eligibility criteria and adhere to a code of conduct. Their functions are adjusted periodically to ensure the systematic compliance of the SEBI regulation. Application supported by the block amount where the investor funds remains in the bank account until the shares are allocated. This protects investor from liquidity loss during the IPO process and ensure prior transparency in the fund movement. In the secondary market, which deals with trading of already issued security, SEBI role is even more extensive. Stock exchange, broker, dealers, property traders and clear corporation under SEBI direct regulation. SEBI lay down listing norms, trading rules and risk management procedures and surveillance activity using advanced surveillance system to detect price manufacturing, circular trading from running and other unfair practices. Stock exchange also required to export suspicious transaction and take immediate action if any irregularity are found. One of SEBI landmark reform, the secondary market, was the introduction of dematerialized trading. This shift from physical share certificate to electronic, from drastically reduced settlement time, prevents forgery and improve market efficiency. SEBI also reduced the settlement cycle, moving from T+5 to T+2 and more recently to T+1 in a phased manner. This enhanced liquidity and reduced counterpart. The registration has also ensured the broker and intermediaries maintain minimum capital, adjudicate, implement known your customer norms and use secured system. It also supports the future option derivatives or complex instruments that requires a high level of transparency, margin discipline and risk management. SEBI has laid down comprehensive rules on the derivative products and their disclosure norms. It has also approved the launch of currency and commodity derivative, allow investors to hedge their exposure while maintaining systematic stability. As the capital market evolve, new instruments and entities emerge that require regulatory oversight. One example is the Alternative Investment Fund, well known as AIF framework, which cover venture capital funds, private equity funds, hedge funds and infrastructure fund. SEBI has disclosed reporting an investment limit. It enhanced the high-risk investment vehicle are accessed only by sophisticated investor and the conflict of interest are adequately managed. As we move forward in our exploration of SEBI regulatory roles in India's capital market, it is essential to examine its significance initiative. SEBI has taken to align the India's capital market with global standard. This reform and regulation have not only made India's market more attractive to foreign investors but have also enhanced transparency, accountability and operation efficiency across all segments. One of the most significant steps taken by SEBI is investor or FPI. These are overseas entities investor in India securities such as share, bonds and derivatives. SEBI consolidated earlier categories such as foreign institutional investor and QFI, qualified foreign investor, into a single category of FPI. These streamlining the entity process for foreign investor and ensure better compliance and monitoring and enhanced India's integration with global capital flow. FPI are required to register through designed depository participants and meet known year restrictions on sectoral caps and ownership to limit in securities sensitive sector. This balance maintaining a national interest and regulatory oversight. Another landmark of SEBI regulation influence is corporate governance. SEBI has been a pioneer establishing one of the most important corporate governance framework among emerging market. It introduced the listing obligation and disclosure regulation adheres to higher standard of governance. This include the requirement for independent directors and committees, nominations and remuneration committee, risk management framework and detailed disclosure on related party transaction. The idea is to ensure that the management of listed companies act in the best interest of all stakeholders, especially minority shareholder. SEBI tightening of norms for broad composition, director responsibility and auditor independence has significantly improved trust in listed company and has helped attract long-term investment. Whistleblower protection is another important aspect of SEBI. Investor protection framework, SEBI encourage employees and shareholders to report fraudulent practices or violation through its formal whistleblower mechanism. It treats such composition with confidentiality and ensure that the information are protected from relation. This has enabled SEBI to uncover several corporate fraud and governance lapses that might otherwise remain hidden. In this way, SEBI promotes ethical behavior and internal vigilance within the market. SEBI has also been proactive in regulating credit rating agency known as CRA, which play a critical role in the bond market by evaluating the creditworthiness of issuer. The failure of some CRA to predict corporate defaults has caused financial damages to investors and question their reliability. SEBI now requires CRA to maintain stringent disclosure of rating nationals, monitor and regularly disclose any conflict of interest. The rating process is now subject to greater transparency and penalties are imposed for misconduct or misrepresentation. SEBI regulation of CRA is a part of its broader goals to ensure accountability and accuracy in financial intermediation. Another key component of SEBI role is its focus on systematic stability through surveillance and market intelligence. SEBI operates a sophisticated market surveillance system that uses data analytics, algorithm and artificial intelligence to detect unusual pattern or insider trading and market manipulation in real time. It controls high-frequency trading algorithm order front running by brokers and sudden price movement. These alerts are analyzed by its investment team. SEBI also conducted with the stock exchange, deposition and other financial regulator like the RBI and IRDI to share information and take unified action in case of market disruption. SEBI also play a crucial role in crisis management and market integrity during period of high volatility such as the global financial crisis of 2008 or during the COVID-19 pandemic in 2020. SEBI has acted decisively to maintain stability. It imposed short selling restriction, margin requirements, extended settlement timelines and tighten of disclosure to calm market and protect investor within the ability to invest effectively during the stress event, enforced its role as a guardian of market order. A dynamic area of SEBI regulatory efforts is the use of fintech and digital platform. As capital market become increasingly digitalized, SEBI has kept pace by creating a regulatory sandbox framework to allow for innovation under controlled environment. Fintech startups can test new product and service while remaining under regulatory supervision. This not only foster innovation but also ensure investor safety. SEBI also maintained two-factor authentication for online trade, implemented digital advisor and robo-advisor platform. In addition, SEBI has actively promoted the participation of retail investor in the capital market through the development of equity mutual funds, exchange traded funds, and real asset investment trust and infrastructure investment trust. It has widened the spectrum of investment avenue for retail participants to make investing more accessible and affordable. SEBI introduced participants like BSC, Star MF and NSE MF Central, enabling the digital investment in mutual funds even from remote location. The regulator has also taken steps to cap commissions and prevent mis-selling of product by distribution and financial advisor. SEBI also introduced the concept of eKYC, which allow investor to open demat and trading account through paperless processing using Aadhaar and mobile number authentication. This has significantly reduced onboarding time and brought millions of new investors into the formal market ecosystem. Such measures are particularly crucial in a country like India, where financial inclusion is still work in progress. In recent years, SEBI has also been focusing on sustainability and environmental, social and governance issues. Recognition that capital market can play a role in sustainable development. SEBI has a mandate ESG disclosure under the Business Responsibility and Sustainability Reporting BRSR framework. All listed companies in its top 1,000 by market capitalization are required to publish the report. This include information or carbon emission, water and social diversity, ethical sourcing and government practices by empower investor to make social responsibility investment decision and nudges companies towards ethical and sustainable business practices. SEBI is also encouraging green bond and social impact bond by creating a favorable regulatory framework. Issuer of such instruments must provide detailed issue proceeds disclosure. This not only increase transparency but also mobilize capital for environmentally friendly and especially beneficial project. Now let us briefly discuss SEBI quasi-judicial and enforcement power. SEBI can investigate violation, summon records, examine individual under oath and impose penalty. It has a dedicated enforcement department that conduct inspection, initiate prosecution and pursue recovery of ill-gotten gains. SEBI can pass order, freeze bank accounts, debar entities from trading and attach asset pending investment. This power enables it to take with swift actions and prevent further damages to the market. All such orders can be challenged before the Security Appellate Tribunal, known as SAT, and SEBI actions are subject to judiciary review, thereby ensuring balance between power and accountability. A crucial step SEBI took to reduce settlement risk and improve transparency was the introduction of T+1 settlement cycle in a phased manner. India became one of the few large markets globally to adopt T+1 system, which means that the settlement of trade now happens one day after the trade date. This reduces contemporary risk, improve fund utilization and make Indian market more attractive to institutional investor. Another notable initiative of SEBI roles in encouraging public shareholding. It has mandated that listed company must maintain a minimum public shareholding of 25%. This ensures that the market remains liquid, that companies are subject to public scrutiny, and that wealth creation is inclusive. SEBI has also taken a step to increase female representation in the board, mandate a quarterly reporting and require disclosure on prompt pledge ensure greater transparency. Lastly, SEBI consultative and participative approach to regulation deserve mentor. SEBI regulation issue discuss paper, consult with stakeholder and incorporate public feedback into its final regulation. This inclusive method ensures that regulations are practical, transparent and widely accepted. SEBI also collaborate with international organizations like IOSCO and the World Bank to adapt global best practices and bring consistency to its regulatory framework. To sum up the detailed discussion, SEBI is not just a market watchdog but a visionary institution shaping India's capital market ecosystem. Its regulatory role spans from protecting investors and promoting transparency to encourage innovation, ensure system to stability and aligning the Indian market with global standards. As financial market involve, new challenges emerge to be in the crypto and cyber threat or climate related risk. SEBI adaptive and proactive approach will continue to be a crucial action for do not merely influence capital market, they impact financial inclusion, investor trust, economic growth and India's global trading. Thank you for staying with me for the comprehensive lecture. I hope that in-depth understanding of SEBI regulatory and give you a clear picture of how the Indian capital market operate and why SEBI presence are important, and I look forward to meeting you again in our next lecture. Thank you.